Hey, what's up? It's day 19 of becoming a great investor. Almost 20 days now. But I finally woke up on time somewhat. It's currently 9:18. So it's Saturday as well. Probably going to spend some time going through my email for the Zing Fund. I signed up for a few newsletters, read through some of the newsletters. Then also read through some of the current events that are going on today. So I'm gonna go into the host and then kind of write down what I plan on doing. Let's see, Zing Fund. Saturday, January 6th. Reading the news. Alright, now it's combing through email newsletters. Okay. Book review, investing in U.S. financial history by Mark Chicken, CFA, is an epic and heroic work. Okay. Wealth Fund claims GIPS. World's 7th largest sovereign wealth fund, SWF. Integrating natural capital and biodiversity in the investment process. Microsoft Outlook. Financial markets history. What's this? Yeah, it's impressive. Submitted in November 2016. William Goatsmith. Oh, okay. Yeah, I think I've heard of this guy. Oh, okay. I don't want to get lost in the sauce. That's a pretty big one. First U.S. real estate bubble and 3 lessons from the Mount Tambora as an asset class. How sharp is the ratio of global stock indices? What's this? Investors across the globe use a Sharpe ratio among other risk-adjusted metrics to compare performance of mutual funds and hedge fund managers as well as asset classes. Okay. Risk return minus risk-free rate divided by volatility. Okay. Right. What are the implications of such a conclusion? A common one is that the distribution of returns must be normal or Gaussian. Okay, so why is that? If there's significant skewness in the returns of the risk of the security strategy asset, that should be accurately described. Yeah, this seems pretty normal. Skews left. Median, mean. So it's skewed left. I would think that means that it has a longer left tail, right? Skewness. Okay, so it has a longer right tail. It's prone to, I guess that's what they mean by it's prone. It has a higher tail risk. Yeah, see, median, mean. Okay. Shanghai Composite. Is that this one? Median return. So this would mean it's aggressive right skewness over time. Crash up more than. That's cool. Maybe better gauges in these markets. The other tools, 7 have fairly symmetrical distributions and 5 had moderately skewed ones. All told, this suggests that Sharpe ratio still has value as nice short. Unveiling insights is growing forest. Discover the dynamics of Generation Z's investing app, social media, crypto, FOMO, and family. Okay, let's see. New post published S&P earnings, jumping forward estimate. Fundamentalist healthcare. So let's start with your earnings, jumping forward estimate worth noting. For the second week in a row, there was no data forthcoming from IBES and Refinitiv, which is actually understandable since the last week of every quarter, and the first week of the next quarter is very slow in terms of earning release. Using the last live report from IBES, data from Refinitiv, the new forward quarter estimate, FFQE, which we won't see up until next Friday, will be somewhere up to 243.98, up sharply from the last FFQE of 232.95. The SP 500 earnings yield jumped to 5.19% using that FFQE. The quarterly bump is always worth scrutinizing, although it can be tracked well in advance. BlackRock, Citigroup, this has been a top 10 client holding since the financial crisis, but clients are still long. Bank of America. Jeffrey reports Monday, January 6th after the close, and KB Home reports. Earnings growth, consumer discretionary. So why that much in 4 months? 17, healthcare, basic materials, communications, utilities. Curious look at the sectors. One note, the sectors seem positive revision growth rates, which is actually pretty rare, or which sectors are not seeing much degradation or negative revisions in EPS growth. Noting it, so high yield credit spread widens sharply. Might not last very long and pile up quickly. Remember, the SP 500 earnings yield can rise two ways. The SP 500 declines in value, or the 4 earnings quarter estimate rises with the earnings report as it did in October 24. Expect the SP 500 to return 11% to 30% next year. Here's what make me nervous about 2024: increase the probability of negative returns this year. Okay. High yield and corporate bond credit. What is the corporate bond spread? High yields. High yield credit spread. Is that the spread between risk-free and like the average credits? The average corporate bond? Yeah, I guess it's an index. So widened. So that means the yield on bonds. So I thought the price, if people are piling in, that means the price of these bonds are increasing, which would decrease the yield. So I'm a bit confused on why that's increasing. Yeah, so what causes credit spreads to widen? I think that's an interesting. What causes credit spreads to... High yield and corporate credit continue to trade well with high. Corporate spread widening usually occurs in tandem with recessions. Why is that? The downside trade the last 2 years involved higher interest rates, 10-year treasury yield, a stronger dollar, higher crude oil, all resulting in lower stock prices the last 12 months. Wait, USGG5Y5Y. Nurturing habits, mainstream financial media talks constantly about inflation. Inflation expectations that drives. Huh?
起来了。
Yeah.
那你早上吃了啥？给你买那个面包，你吃一点。
Yeah, what can I share?
中午吃，我准备那个啥了。看火锅。
Okay. Thanks. There that is. Mainstream financial media talks constantly about inflation, but the money and banking economics texts explain that it's inflation expectations that drive inflation, and ultimately bond prices. Huh. Bear Traps Report blogger and the author of Buck, Colossal Flair, and Common Sense. Let's see. Winners versus losers. What is this chart showing? Optimistic sentiment that we've seen in the stock market since November 26. 2024 could easily see bonds outperform stocks, and yet both have a good year. The last round trip for monetary policy was late. The Fed rotated off the ZERB. And Jay Powell must go 30% Fed funds for the economic days are sharp. Barclays aggregate, or the bond market's equivalent of the S&P 500, returned 8% and change, while the TLT iShares 20-year Treasury ETF turned at 14% in 2019. Very small mid caps, watch rotation from mid caps. SP 500, NASDAQ Composites, NASDAQ 100, QQQ, Russell 2000. Weighted, so maybe. Oh, QQQ I think is the triple levered ETF, right? NASDAQ 100. Okay. Modified capitalization weighted index. Alright. I guess those are considered large cap then. Alright. Yeah, Russell 2000, mid cap 400. Those are equal weighted. Okay. So that means probably mid cap and small cap did not as well. Ten largest stocks have high multiples, but multiples drop the further away you get from them on the market cap scale. SP 600. Here's based on 12 months earnings forecast. There was the the table above is the major U.S. equity benchmarks with annual returns. Small mid caps looks reasonable from 3 to 10 year returns, but between the two of these mid caps look a little bit better from a return perspective. 3 to 10 years. So 2001 points, 8 points, 7.1%. SP 500. Emerging markets shares peaked in MSCI X. Yes, all world 3.7. Developed markets, developed emerging markets 15 years ago. I guess this would be 2008. Average for all time frames. Despite those years drop off the 15-year return data. It's typically a drag on portfolio returns. Portfolio managers have to hold international and emerging markets for uncorrelated returns. Well, I do think 2024 will be about the Fed and Jay Powell and whether the FOMC reduces the Fed funds rate. Right now, monetary policy is very restrictive. Okay, so the spread between the Fed funds rate and then also core PCE year over year. So the spread between inflation and the actual federal funds rate. Interesting. This chart shows the funds, which means meaningfully above the Fed funds rate. I think this means the PCE, which means that while monetary policy remains very tight, all predictions, both here and particularly on financial media. Even most of the time. Just think about COVID, the Russian invasion of Ukraine, the events of last 2 years have materially altered the economic and financial landscape and have or will force global economies to adjust to current events. All spelling errors and mistakes are 100% my own. Any prediction that is accurate is probably someone else's. Capital markets change quickly for both the good and bad. If readers are uncomfortable with their own portfolio volatility, then adjust your portfolio. Thanks for reading. Have a So what is this? There are two forces that have significant influence over markets between January. Or markets between November and January. Window dressing by mutual tax losses, selling by individual. Mutual fund portfolio managers want to show as many of the year's winners in their portfolios in their year-end statement. Their clients, the investors in their funds, will receive these statements in early January. The more winners the portfolio has, the more impressed those investors are. As such, mutual fund managers tend to buy more of their best performing stocks in the last 2 months, so then they're losers. The Bear Traps Investment Research. Who's Lawrence McDonald? The Bear Traps Report. Follow. Alright. Convert by. That's cool. Oh, yes, yeah. S&P is on course to gain 18%, but without the Magnificent Seven, 71% year to date. S&P is only up 4-5% this year. Russell 2000 index of small caps is even down year to date. Means investors should have some large capital gains, but also some steep capital losses. Okay, I kind of see. So every single time there's been an increase in the annual returns, there's also been a decline in the next period. Why is it skipping over some years? It's an Epic has versus have-nots. Nvidia, Meta, Royal Caribbean, Blow Group, A&D, Palo Alto, General Electric, Carnival, Econ, Pfizer, Walgreens. Addition, other class investors that incur capital gains also sell some of their losses in last week's stops. The year's strongest stocks tend to rally further into year end, while losers continue to see selling pressure. I see. January effect. Let's see. VF Corporation. Stock price. Not this one. January effect. There's a Q4 overdose in Dow Jones Industrial Average names and out of users. Tax loss selling basket by the end of 2022. Palantir, Alibaba, RED. So our 7-factor capitulation model delivered a strong buyer. A Solaris Lithium Miner FMC Corp. LFMC, to a vaccine maker P. Moderna. Combination of high interest rates hitting demand, distribution workers through distributors working through high inventory levels, policy change reducing incentives in California has made it tough for residential rooftop solar stocks. Solar for companies and individuals to share the plunge in price low tax. Solar stocks. Enphase Energy. Oh, okay, it's actually profitable. I like looking at price charts. Solar Edge Technologies. These stocks were decimated in 2021 after the court rejected claims that the Federal Housing Finance Agency exceeded its authority. Government-sponsored enterprises. Government-sponsored entities will be privatized. Tax selling loss might be $90 in a barrel. Curious, sold off hard territory. What's MSOS? Oh, maybe medical marijuana. What is RSI? Relative Strength Index Indicator. Okay, this is cool. Apply. Oh, am I gonna have to pay for this? Oh my god, it's so much money. Yeah, I think I'll probably be good. I wonder if there's a way to... Yeah, like I wonder if there's a way to subscribe to the newsletter. I don't think there is. Yeah. Oh, come on. Okay. What's this? That's .com stocks. Currencies. Let's go. Probably not yours. Thanks, bro. Huh, okay. Relative strength index. This is definitely trying to some sensational reporting, I guess. Value investing struggled during the long era of low interest rates. Warren Buffett's partner warned investors hunting for deals. Yes. Almost 30%. $401.
Li Lu was a student leader of the Tiananmen Square protest. Now he just may be the next Warren Buffett. Dennis, I'm curious, not many people have heard this guy's name.
No one's heard his name, and that's why the story is so incredible.
But Charlie Munger says that there's no doubt in his mind he could be filling a key role managing investments at Berkshire Hathaway. Right. So what do we know about him?
He brought in a battery-making deal for Warren Buffett's company, Berkshire Hathaway, and that proved a huge success for Buffett, and that helped Buffett
suddenly liked him.
Yeah, but
he made money for him.
Yeah, really take a shine to Mr. Liu, and the journey really is incredible. From those Tiananmen Square protests and the massacre to really the head of the capitalist icon of the Western world is such a tremendous journey.
There he is on the right in the photo you're looking
at. You have to wonder, what does this say about America itself? Is it a strength or a weakness that an immigrant is leading this company? Evan and I were talking about this yesterday.
It's a strength.
I think it's a strength.
It's a great thing. What a great thing.
But to have a Chinese face, really, in some ways, as the head of an American company, certainly will communicate a lot about how the world's changed when Warren Buffett goes
I think it's almost less the fact that he's Chinese or whatever his nationality.
He's Chinese
original.
American,
yeah. What I find interesting was that here was a guy at Tiananmen. You had to be. I use this in a positive sense. You had to be ambitious to be a leader of Tiananmen. You had to have a vision or be a strong personality. And I think it goes to show that, it's the old, if you can make it here, you can make it anywhere.
Well, and he visited the States, he gave a speech at Columbia. That turned into a book deal. It also offered him financial scholarships. He got like 3 different degrees from Columbia, started a hedge fund in the late 90s, met Charlie Munger early in the 2000s. Charlie Munger gives him some of his nest egg to manage. Again, he makes this big investment in BYD, a Chinese auto firm that also makes a lot of lithium batteries for cell phones. It's been huge. There is some question as to whether that's sort of inflating his abilities as a hedge fund manager. And he's a little bit different than Buffett likes to invest in companies he knows. This guy's all about high tech, back up the truck. We're taking big contrarian positions.
He doesn't have as long a track record, obviously, as Warren Buffett, but as long a track record as plenty of other people. So it obviously speaks to how Buffett regards him personally and his ability to win people's confidence. So it's, in some ways it's a gut choice, and it's an incredible choice.
And how certain is this? We should be clear that Charlie Munger has indicated he sees this guy having some investment role. Buffett has said when he steps down he may split the CEO-CIO role, so the CIO role could be what this guy
We're going to
takes
see a number of those positions. David Sokol, who runs the utility in Buffett's empire, will probably be in charge of that sort of part of the business. You have someone to run the insurance business, but Liu is the certainly the front runner for this gig. So
does
I
it
think
make
people will
sense
be
to me?
definitely checking it out today.
Huh, it's blocked by client. I don't know why it's not popping up. Between 1970 and early 2007. Using amounts of cash that present worth of a value stock, by contrast, is usually weighted more heavily towards earning in the near future. There's not a cash flow story, it's a brave new world story. So Groove sucks really got punished. This is cool. If you come straight up with most of us consideration. We stay true to this mantra of buying at maximum pessimism and being greedy when others are fearful. I don't like that. Aerial investments. Future news and insights. Saying fund. Brian. See. No. And there's also Oak Howard. Holds a BSEC degree, but is that engineering? Is that major in finance? Subscribe. Email alerts. So there's Howard Marks, and I feel like there's also I wonder what's other. Does Jane Street have one? No. Jane Street. Hudson River Trading Newsletter. Huh, that's cool. Newsletter. 2 sigma. Yes, most of these are, let's see. Hmm. Oh man, these are all pretty expensive. I wonder if a bunch of Goldman Sachs. JP Morgan newsletter. Zane Fund. Sites. Newsletters. Maybe ideas and insights. Bi-weekly on Saturday, Thursday. The same fun at gmail.com. Yeah. Like maybe at some point I might be overwhelmed with all these newsletters, but I think that should be okay for now. Let's see, do I need to confirm any of these? Trinity. Oops. Okay, I hope it's not too much marketing, but yeah, I am probably gonna take a break for now, go eat some breakfast, go shower, and get ready, and then I'm gonna come back, going to probably get started on the discounted cash flow model that I was hoping would start yesterday. So I'm gonna write down what I did so far with the newsletters. So I read through a few newsletters and articles. So the Fundamentalist, CPA, CFA. So there's by the Enterprising Investor. Enterprising Investor. So the Sharpe Ratio article, and then we also have Sharpe Ratio eruption. Then this one. Who is this one by? Pricing Investor, Fundamentalist. That's what it is. Fundamentalist. So he talked about the 2024 outlook and also SP 500 forward earnings. Also so there's also that one, I'm forgetting he cited something. What's this? The bear traps. Okay. The bear traps reports. Epic tax loss opportunity. Okay, yeah. Probably gonna head back now. Ooh, one last thing, so article. USJ. So we had value investing. Not work anymore. Okay. In this case, I'm gonna end the stream here. Alright, bye.